Hi everybody. Hope everybody's doing well and hope you guys been making a lot of money, through trading. I know some of you guys have been. Uh so recently, right, it's been really rough, honestly. Last month there was like a really big correction. My portfolio took a really big dip, or else I would have been at 25,000 already. I actually probably took like a 4,000 to $5,000 loss. A lot of people actually got their career ended last month. So I just been trying to get back, and honestly, um, a lot of you guys know that I was working, but I had stopped working since February. So I've literally been relying on trading to pay my bills. So that's why you don't see my portfolio over 21,000. At one point, it was over 21,000, but it dipped back recently because I've also been taking money out to pay bills or whatnot. But yeah, it's definitely been challenging. Nobody said that this would be easy, but all you could do is keep swimming, no matter how hard the tide is. Like I've seen Rocco, go from 60,000 back to 40,000, and now he's over 100,000, like 110,000. So seeing people like him, it inspires me to just keep on going. Sometimes you can't compare yourself to other people. Like some people are like at chapter 35 of their career, and you just started, so you're on chapter 1. And honestly, I feel like I'm still on my first chapter. I really only started trading last year. I was always investing prior to that. I never was really hands-on the market like what I'm doing right now. So I just wanted to take the time out, obviously, to other than to update you on what I've been doing, but also to show you my positions. I've been playing mainly credit spreads. This is $17,000 worth of Amazon credit spreads, and in a nutshell, credit spreads it's an option strategy. So for this right here, I'm basically betting that Amazon will stay above $3,010 before this contract expires in May 28th. So basically, as long as Amazon stays above $3,010 by May 28th, I'm able to make up to $1,601. But if Amazon, let's say, skyrockets like crazily, right, like by 100, 200 points, then I might be able to cash out at least half of this credit that Robinhood already assigned to me. So I might be able to make $500, $700, right, cash out before this expiration date. But the longer I wait, basically the more money I could make, unless the stock goes up like crazy. So this is called a put credit spread. Usually people play a put credit spread when they're bullish on the market. They feel like the stock is gonna either trade sideways or it's gonna stay up. So Amazon's been doing really well trading sideways, which is why I've been buying put credit spreads. It's definitely a safer play. Sometimes it might take time to cash out on. Like this might take me a week, 2 weeks, right? Sometimes I can cash out within a week. So it really depends on how the stock is moving. If the stock spikes up like crazy, then I cash out earlier. If it's trading sideways, then I might have to wait closer to the expiration date. So that's what I've been doing, right? The credit spreads. And I've been playing airlines, right? Like jets. I'm up $67, nothing crazy. Had I waited to buy in, but there is no what ifs, right? I could have been up like $600 already, but I'm looking to cash out of this at 27.15 or 27 and up. And UAL, right, up like 89. I only bought like 50 shares. I mean, I could always buy more shares if I want to. So yeah, these are basically the positions I'm in right now. But what I do want to share with you guys is my Tesla play. It was crazy. Like, I definitely wouldn't recommend it to you guys, but for some of you guys that are playing the game, maybe it's something for you guys to think about. So I bought Tesla puts on Friday, and it expired the same day. And for those of you guys who ever played options, you guys know that when you buy a put, you're banking on a stock to go down, right? So I saw that Amazon was already up like 2% for the day, so I bought in around like 10:30ish, around this time. So I saw that it already rocketed up so much. So I was like, you know what? Let me buy a put. Like it should go down, and it did. So it went down. So I cashed out on two. I cashed out twice, right? Because I played Tesla puts twice, and I made like a quick 240 bucks between this time. So I was like, you know what? Let me try to make 500, right? I wanted to go back to bed, but I was being greedy. So I bought a put when it was around right here. But then guess what? It bounced right up because news came out that Elon Musk, like, I don't know if he sent a satellite or a spaceship, he sent something to Mars. So the market went crazy. They were bullish, and boom, it shot up to like here. And guess what? I was down $1,200 just off of 4 contracts. It was so scary. But you know what? I was looking at the historical data, and I was like, there's a way Tesla could actually come back down. I was like, I'm gonna wait till after 12 or 2 o'clock, because honestly, because you guys know that Thursday there was a sell-off with Biden about the tax plans and stuff that I already told you guys. So I was like, there's no way people are so bullish. It's a Friday, right? Usually Friday's a sell-off day, and something like Tesla is so volatile. And not only that, they have earnings on Monday. So I was like, it's probably just a little pump for now. It'll probably go down later. So I waited. I was so stressed out because imagine, because if I didn't cash out my contracts on Friday, I would have been asked out, like, because it expired on Friday. So there's no holding it, waiting for it to pump back. If it didn't go the way I wanted to go on Friday, I would have been screwed. So it was a gamble. So I waited. Boom, it finally shot back down. I sold it right here. And if I didn't take my profits here, I would have got screwed again, because look, it popped right back up. So it was really scary, the way I played Tesla. And recently, being that I'm trying to like swing trade, I'm trying to like make day trading moves. I haven't been looking at fundamentals as much. I've been looking more at graphs like this, where I've been looking at moving averages, which I'm gonna do more in detail of when I understand it better. But I want to take the time out to at least explain to you guys like how the candlesticks work. Right, I like to joke rock and call it candlesticks, right? So if you're using Robinhood or whatever you're using, right, you're able to basically change it to a line or change it to candlesticks. Candlesticks definitely show a lot more information, right? And I've been wanting to share this with you guys, but I wanted to understand it more before I share it with you guys, because I don't like sharing something with you guys and then you guys ask me questions I don't know how to answer. So I'd rather get better myself with it before I share it with you guys, if that makes sense to you guys. So basically, when you're looking at this graph, right, what I like to look at, you could look at it on a 1 day frame, 1 week frame, 1 month frame. It's basically like it just gives you a different perspective. Like it doesn't really exactly tell you exactly how you should be playing something, because the market can always react to certain news and something can always happen. But it's reading these graphs is a really good way, and kind of better predicting, I would say, better guessing like what the direction of the stock is gonna go. So I'm looking at this 1 month chart right now, and I'm looking at these green candles. By the way, these green candles means there's a bullish sentiment, and the red candles bearish sentiment. So usually when you see a red candle, that means people are selling, right? And the way you would look at it, right? So I'm looking at this 1 month chart, if it would stay here. So if you guys look at here, right, I'm looking at this red candle. So for this red candle, the O stands for opening, right? I can't move my mouse, because if I do, it's gonna take me away off what I'm about to show you. So if you guys are looking at this red candle, you guys see on the top left where it says price O. O means opening. So for this candle, the opening price was $627.83, and it closed right where you see it says C on the right side. It closed at $622.63. And the H means the high, like the highest it went, and then the low is the lowest it went for this candle. So every candle is kind of like a trading activity, like what happened during that time, right? So and when you look at this red candle looks really small, but when you look at the volume it's a really big red volume underneath the candle, so you know that there was a lot of people selling on it, right? So usually, like let's say if I'm looking at the 1 day chart, right? If I'm seeing green candles, you know, obviously, like I said, it's bullish, right? Um when you see a candlestick like this where there's a wick right on top of the candle, that means that there was a lot of resistance, right? The wick stands for the resistance. When you see the wick at the bottom of the candle, then that means that there was a lot of support. Okay, and if you see a candlestick like this, right, where the wick is like the lines are kind of like equal, and the red candle's like in the middle of the wick, then it was like kind of neutral, like people wanted to support it, but people wanted to sell it. People weren't really sure, right? So you could kind of use the candles to dictate in a way like how the people or how the market is feeling about the ticker. I hope that helps. And I was using simple moving averages, but then I was doing more research, and I think exponential moving averages are better. Like it weighs in the price of the market a little bit more. Moving averages is basically these lines right here that I'm using, right? They're moving averages, meaning simply put, how would I explain it? Moving average. The average price that the stock is moving at. So basically these lines, it shows you like the weight that the stock has been moving for X amount of time. So I'm using the 8-day, 21-day, and 50-day. Like I said, like I'm still kind of new to it myself, so I have a hard time explaining it, but in my next video I'm going to do a better job explaining what moving averages are. But I just wanted to tell you guys what I've been doing, how I played the Tesla put, and also just like a brief intro on these candlesticks. And I kind of gave you a gist of the put credit spread, so you guys have an idea what options are. I wrote a post about options. I even sent you guys like 2-3 videos in the post. And like I said, because I'm so new to options that I don't do a good job explaining it, that's why I find like videos that I think do a really good job explaining it, so you guys could watch it and you guys could learn that way. And if you guys have any questions, you could ask me or you could ask Rocco. So recently what I've also been doing right before I end the video is I've been using moving averages. So simply put, right, for those of you guys who are a little more advanced, maybe you'll understand this, right? So if I see that the stock has been trending like above the moving averages, then I'm more bullish. Like if I see these candles above these lines, then to me that's bullish. If it goes below the moving average lines, then I'm bearish, right? So if you guys see right here, right, this turquoise line, this is the 50-day moving average, right? So I'm looking at the 50-day moving average for a long-term play. If I want to do a long-term play, if I want to do a short-term play, I want to look at the 8-day and the 21-day. Those are better used to indicate like short-term movements if you want to do short-term trades. So if I see something that's, you know, like let's say I'm looking at the 1-month chart, I'm not really worried about a stock as long as it's moving above the 8 and 21-day lines, right, the moving averages. But if it's dipping below 50-day, then I might get worried. If it dips below a 200-day moving average, then that's a sell-off. We don't know how far the stock could drop. So like I said, this is I'm new to technical analysis. I told you guys in another post, I've always been about fundamentals, reading financial statements. So reading these charts is kind of new to me. I don't know everything, so I'm learning as I go. So as I learn more, as Rocco teaches me more, and as I learn more myself by doing it and by doing research, I'm going to share more with you guys. All right, hope this video helps.